Okay, here are two trades that I took this past Wednesday that I want to kind of go over and break down with you real quick. The first trade was a 31 pip trade. It was a 1 to 3 risk to reward, and it took about an hour for those 31 pips to play out. The second trade was a 90 pip trade. I held that trade for about 5 hours, and it was a 1 to 8.8 risk to reward, so also an excellent trade. If we look at the trade entry checklist, now both of these trades came off of this particular 1 hour sell zone right here, but we see that both of the trades were for sells, the higher time frame bias, the trading range, and the trading time frame retest were for sells. So those were all in agreement. We do see that for our entry signal, we had refine zone bias for sells, and we definitely had the retest of those sell zones. And for our confluences, we had break of structure, we had an imbalance that was present, we had manipulation, we had areas of interest of price points that were hit, and we had volume. So all in all, these were high probability trades. Now I want to zoom out and take a look at this from the higher time frame and then go down at what I was seeing and why I entered on these two particular trades. Okay, so I am going to just pull out, we'll go to the 4 hour here. We can see right here that the Aussie CAD has undeniably been bearish for a very long time. Since 2021, it has been breaking structure to the downside. However, it has been in a pullback, taking internal liquidity for quite some time too. And if we just look at how long has price been in an uptrend, taking internal liquidity to that downtrend that price has been in, and it has been in a bullish run or in a bullish pullback for almost 700 pips. And so that's why buys are acceptable at this point, as well as sells. My trading plan allows me to take counter trend trades, especially when to take that internal liquidity, there are a large enough number of pips that are available to make that trade worth it. Now again though, my eyes overall have been on sells. We don't know what price is going to do. Price may continue to push up to the upside. It may blow right through both of these sell zones and not pay attention to them. We never know what price is going to do, but my eyes have been on the zones looking for a reaction off of the sell zones that I draw. Now this one is the daily sell zone that I do have drawn right now. Price is just right here. And what I had done is when price gets near certain points in the market, I go to the higher time frames and I go to my trading time frame and I just look to see if there are indications of high probability zones anywhere. And when price came here and tested back earlier in December and then pushed back to the downside for a pullback for buys, I go to the higher time frame and look to see, were there any zones that I looked at as being high probability zones where price would finish taking internal liquidity and then push to the downside if price was going to do that. And so when I look at the zones, I had already drawn this zone on the daily right here, and it had already been retested from way back here, formed and retested. But in looking at the pullbacks of just near where price is right now, what I saw is there was a break of structure right here and price pulled back and formed this base, and it had already been retested once. And any zone that has already been retested, especially when it's at a break of structure, is a higher probability zone for me. And so again, I just drew this zone right here as a higher probability zone, and I just watch to see what price is going to do. And I have no idea even to right at this minute if price is going to push on up here to the daily zone that I drew as a high probability zone, or if it was going to stop at the H4. All I knew is that price had already retested right below that zone, and because of that we had another pullback zone that was formed here. So I had a sell zone here where price reacted off that. I had no idea if price was going to trade through. I just draw my zones and then wait to see what the market shows me. And so again, I had my eye on sells. I drew this zone right here off of the 4 hour. And if we drop down to my trading time frame, to my hourly, we can see what I was seeing. When we had this area right here where price formed this sell zone where it pushed up, did not have enough momentum to push on up into my 4 hour zone, it then came back, retested the zone, and dropped. And so when price comes back into this zone, I'm looking for some type of reaction. And what we have is we have equal highs that were created here where price did not have enough momentum to continue pushing up. And so you had traders come in and say, oh, you know, price, that must be as high as it's going to go. Price is going to now push to the downside. And so you did have liquidity pools sitting on the other side of this price point here. And what we see is that price, one of my very favorite setups, is price just comes right past that zone, wicks up, and in the space of 10-15 minutes at the most, rejects and immediately comes back into our 1 hour sell zone. And so now if I zoom in to see what I was seeing and why I took the entries that I did, we'll look at this one right here first. And so on the 1 hour time frame, I was not in here in the office when price first came into the zone. I was still sleeping, and then as I got to the chart, I saw that price was in my sell zone. And so then as when I saw that price was in the zone and that it had had a rejection, a strong rejection, which I was able to mark as manipulation, I dropped down into my 5-minute entry time frame. And looking right here, let's see what I was seeing on the 5-minute. And I didn't point it out a few minutes ago, but there was an imbalance candle, very small, but it was an area of imbalance that was formed on the 1 hour that I had marked here. And so we had the imbalance, but what we had on the 5-minute is we did see where our manipulation, just in the space of 2 candles, price spikes up and then drops back down into our zone. Price pushes down, pulls back, and it pulls back and it forms that zone. At this point, I'm just watching because I have no idea if price is from that point going to maybe push down and continue to the upside, and I have no idea if price is going to go to the downside. I don't know, so I'm looking to see what price is showing me. But what I do see is now that price pulls back, it breaks structure here to the downside, which is important. I like to see the break of structure. I also like to see that right here at this wick that there was structure broken, and that when you say, okay, well, what happened right above that? Price pushed down, and right above that was the pullback. So that makes this refined zone here a little bit higher probability. Price comes right back into the refined zone. We also see that there was a nice little, let's zoom in for you can see that. There was a nice little trend line that was formed where you have trend line liquidity sitting where when price tanked, you were going to take out some engineered liquidity and some stop losses there. We also, as price was pushing up into our 5-minute refined zone here, we also see that there was a little bit of an imbalance formed. It's small, but it's still there. And so there was also a probability of price coming back to at least, if not a pullback, to then push up, but to fill that imbalance. While my short position indicator is just a little nudged a little bit to the left, I entered off of this bearish candle as soon as it left the refined zone. I also, in my refined zones, look for price points, and I watch where price and how price has reacted within the refined zone the last time it was there. And when I looked at the price points, I really just had this 93.250. It was a quarter point as an area of interest in this refined zone, and price came right past that quarter point and then traded right below it. And we do see that price came right back to test the quarter point literally to the fraction of a pip, which was a very beautiful thing. And then price pushed down. And where I chose to close the trade, because I felt like it was a little bit risky. I wasn't really sure if price was going to have the momentum to continue pushing to the downside or what its reaction was. And so when I looked at where to close my trade, I knew that there was a high probability that price would at least come to the bottom of this trading zone, which from where I entered was 25 pips. And so I was totally cool with that. But I looked at this imbalance area here that was seen on the 1 hour, and I thought, okay, you know, I'm looking for it to at least test and fill half of that imbalance candle. But I looked at this break of structure here, and where structure broke as price was pushing up into the sell zone. And so I just looked to actually close the trade out right there. And so I entered the trade at about 6:15 in the morning, and I stayed in the trade a little over an hour and grabbed about 31 pips, which was an excellent trade. And again, I just chose to close out the trade, which would have been smart because I think that I would have gotten stopped out if I had my trailing stopped when price pulled back here. But as that price was running, I'm just going to move my short position over. As price was running, and especially after it closed, I'm looking at what price action is doing. I'm still in a sell zone, and I'm still looking at, is price got enough momentum to continue pushing to the downside? And so as I see this, price is pushing down, pulling back, pushing down, pulling back, pushing down for external liquidity, pulling back, continuing to break structure to the downside. And so I'm just drawing sell zones, and this right here, there was a break of structure right here, and so it says, well, after that break of structure, what happened right above that? And as price pushed down, this was the pullback. So for me, it was a little bit of a higher probability zone than, say, even this zone right here, which was one I was also watching, but I just drew the zone and continued watching, and I watched as price pulled back, and it did not give me an entry right here. It didn't come up into my zone as price pulled back. Price continued to pull back. I did not draw a zone here. I see where equal highs were formed right here. And so I also was looking at a liquidity pool and thinking like, okay, so it's high probability that price would come back to retest this zone. And when I look at where price was pushing down right here and pulling back, it was making lower highs, but it had a very, very small break of structure right here and didn't really have a lot of momentum to continue pushing to the downside. So I felt like that there was a higher probability that price would pull back into this zone. This was my high probability zone in this trading range right here where price pushed to the downside. This was the zone that I was watching, and within this zone there weren't a lot of price points of interest except this whole number of 93,100. And what we see is that price came and beautifully traded just right past that 93,100. But if you look where all of the candles closed, it was never able to close above that 93,100. So that was an excellent price point for us to be watching and looking at. And so right after, even though I did get into this trade a little bit early, I had set a 10 pip stop loss that was above the sell zone, above my refined 5-minute sell zone right here, a 10 pip stop loss. I got in at this candle, at this bullish candle right here. Let me zoom in a little bit. I actually entered off of the close of this bearish candle right here, and it proved to be a little bit early, but that's why we have stop losses, and that's why we give ourselves a little bit of room to play. And so price did pull back into my zone and right above this 93,100 before then pushing to the downside. I grabbed about 90 pips from that trade, held it for a while. Now my exit was actually I looked to think about exiting here, but again, I'm going into the evening time on my time. I'm out of my personal trading volume. I had 90 pips, and I'm not big on giving back nice profits from the market. I'm never in lack. There's always opportunities, and there's always really new cool positions to grab, and the strategy again is so easy. It's just zones. And so what I did was again take this break of structure here, and I just set a trade exit. It happened to be 1-to-8 risk reward ratio. I was really happy with that, so I held my trade. I just went ahead and closed it out instead of letting it run through the night, and the trade won beautifully. Going over the trades and seeing what I'm thinking and what I'm seeing, or what John's thinking or seeing as we're entering the trades, is so valuable. Continue to push through, continue to study, and continue to commit to learning this craft. And I promise you, you will not regret it. It is such a fun journey.